Oliver Sloup and I were talking about that sell-off, that risk-off mentality, and it really shows up over here in the cattle market. And Oliver, what was interesting about this, we started out with weakness right at the outset. We took off and we went higher. Well, here's an example. The June fat cattle got up to 122.70 in this session. And then all of a sudden, there was this horrible sell-off that kind of jumped in here, and now we're down 230 at 119.72. We're working closer to the bottom end of this trading range, and what a wide trading range it is. I mean, it's over a $3.5 trading range.
Yeah, we have been in a wide range here this morning. We made new contract highs for that June contract here this morning, probably tripped some stops from weak hands on the short side and then just reverse. And obviously, as you had mentioned, trading towards the low end of that range. And this is a bearish reversal if it stands through the close and could potentially trigger some additional selling into the weekend and ahead of tomorrow's cattle on feed report. So we made new highs, weren't really able to sustain that momentum. And a lot of people, including myself, kind of wondering why we were making new highs with cash being stuck in a little bit of a rut. So you're seeing some risk off ahead of the report. I think just in a risk off environment, as we've been talking about.
And we're $4 off of the high over here in this next front month of the feeder cattle market as well, with April down 325 at 141.40. The May down 332. That's a big drop.
A big reversal and an ugly reversal. If you're on the bullish side of things here, you really want to see some sort of stabilization into the afternoon session. If we aren't able to get that, we could potentially go retest the low end of the recent range. And for that May contract comes in a little bit closer towards 142. So I think the day's close is going to be extremely important for setting the tone as we head into the weekend for live cattle and feeder cattle. And I think, quite frankly, for lean hogs as well.
I'm glad you brought that up. April up 70 at 94.37, but the May is down 92. And now we're even accelerating the losses even further in these summer months. We're back below $100 again. Was that $100 level that we went out and went all the way up to 102.50 just an anomaly?
It's the 100 level is a psychologically significant area. We're hovering right around there right now in that June contract, down about 2.5. And I think, as I had mentioned, today's close is going to be really important. We've obviously had a huge run up in lean hogs and maybe a little bit overexhausted. So I think a correction in lean hogs is certainly warranted and definitely healthy. There's still a gap below the market. But if we can pull back into the mid 90s, 95, 96, 97, I think that's going to be the key point to keep an eye on. If we're able to hold that on a closing basis, I think we'll be able to rally and continue the upward trajectory that we've been in. A break and close below that 95, 96 level probably mutes us here in a little bit in the near term, and we start to consolidate a little bit more.
Oliver, I always appreciate it. Thank you very much. In fact, I want you to come back tonight on the Rural Evening News, and we'll talk about what we saw in the settlements and get your thoughts then, because, you know, as we close, that's going to set the real tone. We'll talk to you then tonight. I do want to look at crude oil because Oliver mentioned that in some of these energy markets as well. Crude oil right now on the April contract down $3.53. 61.08 is where we're trading at. We've got a $4 trading range plus over here. So that goes back to what Oliver was talking about, that big sell-off. But what about the outside markets? The equity markets, like the Dow, up 141 points at 33,158. So, Tammy, there we go. What a day it has been.